Yeah, good afternoon. Yeah, hope you are fine. I'm also doing fine. Uh, so it's a recap on our US oil. So we went through some setups on US oil on Friday before the week closed. So I just want to do some recap on oil, and I just want to map how far has it been going. This is US oil. Yeah, to our attention, we managed to analyze it on Friday afternoon, and we happened to see that oil is bearish, has been on a bearish trend, as you could see. Like I said on weekly, we're just looking for the bias. The bias is always the direction of price. So basically, we're just looking for the direction of oil price, where oil is likely to draw towards. So basically on weekly, we saw, according to the current weekly order flow leg, we just saw a break of structure in between, and we saw price rejecting of this CB. CB is sell side imbalance, buy side inefficiency. So it's fairly, actually it's the same thing like in fair value gap. Definitely it's the same thing, definitely. So we saw rejection, price bounced off of this CB, yeah, and it's drawing towards the previous weekly low, or the weekly swing low. So this is where we expect oil to draw towards. So weekly, we just know the direction of oil. We're still coming down. We're still aiming for this weekly low to make a new lower low. So this is the direction. Basically, we found our narrative. Our narrative is a sell. And where we are selling from, we're selling from this weekly CB or FVG towards the weekly low, the swing low. So this is what we have. This is our narrative or our bias. So on 4 hour, as we skipped, we just want to find our context on 4 hour. When our price of oil bounced off of this weekly imbalance, which is CB, we expected a shift in momentum. Shift in momentum, yeah, you can just simply tell when you see fair value gaps. Like this trend was bullish, as you could see, it was a bullish trend. Yeah, and for a bullish trend, we keep seeing bullish order flow. An order flow is depicted by the presence of bullish fair value gap or fair value gap pointing up. So the moment we ceased to see bullish fair value gap pointing up, our first fair value gap pointing down, it was our sharp turn. Yes, and our internal shift. If you go on lower time frame, you can clearly see this is our internal shift. Though you can still mark this one as your shift. Yeah, basically. But for to get a quicker signal, you normally go to a time frame lower than 4 hour. You wait for the internal shift. Yeah, which is this. I marked it on 4 hour. So this showed the zone of exhaustion. Exhaustion, as we saw an order flow shift, the bullish order flow shifting to the bearish order flow, creating a bearish fair value gap. This is where now we had it in mind that now we are on a continuation to continue selling oil. So as we shifted, we kept on creating a series of order flows. You could see this is another order flow. This is one leg towards this. This is another break of structure. Yes. So I marked the break of structure on 4 hour. Friday still is the same thing that I'm doing. I'm just catching up on oil. how it's been moving. Yes, so this is H4. Basically on H4 we see the most recent order flow is this one from here to here, but as we say that this was what an area of inducement, this was inducement. Yes, so price had to first clear this inducement, tap our area of supply, yeah, our area of origin before continuing to draw towards the downward side. So this is the low, the swing low on H4. This was our first target on oil. It's not yet tapped. We're still hoping for it to be tapped. So after that, price on Friday, when we saw it was actually reacting towards this weekly what, this 4-hour area of supply. Yes, still again we had to find a confirmation on 15 since it's our time frame of entry. Confirmation, you only look for a pattern, a reversal pattern. Basically for me, when I'm making entries, I use I use mitigation blocks, breaker blocks, or I can still use fair value gap, order blocks, yeah, even the fair value area. So this was the chalk on 15. This was the shift again on 15. This was my chalk on 15. Since it was my chalk, I wanted price to create a chalk. Then after price created a chalk, I had to mark my areas of origin, my order blocks of origin. 15, this was the first one. Another one, it was here. See, these areas are not mitigated. You could see there's a small gap here. This one is not mitigated. You can see, yeah, it wasn't mitigated. There was a small gap. Yes, so I had two areas of origin, of which I was waiting either of them for price to tap so that I could start selling. So when I waited, since they were all in premium, as you could see, this one is above 50 and the other one is above 61.8. So that's the premium pricing. So well, I waited and I saw a reaction here. This is where our price reacted. Yeah. So it never reacted on this one. It chose to react on this. After the reaction, definitely I have a few limit orders here and other limit orders up. So the first limit orders, they're the ones which got triggered. Yeah, so I got fit into the trade. So we continue to have another break of structure. Now the trend now is continuing because now we've started to form bearish order flow, continuing to the direction of the trend. After this, there's a break of structure. As you could see, after the break of structure, we expect again price to mitigate our area of premium. Exactly, was actually our area to mitigated. So we're hoping to see oil continuing to sell. So we're expecting a sell towards our first area of target, the swing we see on H4 and the weekly swing that we're hoping to draw towards at price level 55.144. So basically, yeah, oil, we still hoping to see a continuation for sellers. Yeah, so basically if your entries were around here, it's better you hold. Yes, because now price actually has already shifted from bullish to bearish, yeah, towards the continuation of the weekly trend. So thank you. This is what I had in mind on US oil. We're still holding sales. Have a good day.